Hi, I'm Tico Da Silva with Sprott Global Resource Investments, and I'm sitting down here today with Bob Quartermain, President and CEO of Pretium Resources. Bob, good to see you.
Great to be here.
Yeah, I'm very happy to have you here, and what I'd like to ask you about are developments with Pretium Resources. But before getting into that, for the person watching, if they're new to resources, new to your story and background as well as Pretium Resources, could you tell us a little bit about yourself and what you're working on?
Yeah, sure. I've been in the resource business now for 40 years. I started basically back in 1976, working in the Northwest Territories. So I spent the first part of my career as an exploration geologist, kind of boots on the ground. I joined Teck in 1980 and worked for Teck Corporation at one of their mines. I then drilled off the David Bell gold mine in 1982 to 1984. So I had experience working underground, particularly in gold mines. In 1985, Teck transferred me to Vancouver to take over a small company called Silver Standard. At that time, it had 2 employees, a market cap of around $2 million, and as we may discuss a little later, we took that into being a company well worth about $2 billion by a silver acquisition strategy we had at the time. As part of that strategy in 1999, we merged with New Hawk Gold Mines, which had the Brucejack Project, which at the time had about 400,000 ounces of gold in it, but 16 million ounces of silver. So we did a $3 million merger at the time when metal prices were down, merged with New Hawk, and were able to get the silver from it and also the gold. In 2005, when gold prices started to move up, we went back to the Brucejack Project and started drilling it in Silver Standard and started hitting not only low-grade material but high-grade material as well. And we hit some high-grade material that I thought was quite interesting. After 25 years with Silver Standard in 2010, I resigned. The board decided they wanted to bring in some more as we developed it into a mining company with the Brucejack Project. And later that year, they decided to sell the Snowfield and Brucejack assets. And so I looked at some of the drill core and saw some of the most spectacular high-grade gold I've seen in my career. And I agreed to go out and basically we launched Canada's 3rd largest IPO that year. We raised $283 million. And I agreed to buy this asset back for $450 million, which just 10 years earlier, we'd purchased for about $3 million. And that's what shows by discovery, because we took it from a resource of 400,000 ounces of gold to over 45 million ounces of gold, low grade, but hiding within it was the high grade Pretium project in the Valley of the Kings, and that's what I'm currently working on.
What were the first signs that you and your team saw in acquiring the containing company, which you mentioned that held the Brucejack Project at that time for about $3 million, you mentioned?
Yeah, the key thing about that, and it came from, of course, another individual here at Sprott who's very important, is Rick Rule. Rick had brought to my attention and said, listen, there's 16 million ounces of silver there. And we had a philosophy at Silver Standard at that time. We were buying silver ounces in the ground at pennies an ounce. So the company had 2 million cash. It had 16 million ounces of silver. We paid 5 cents an ounce for that. So that was kind of the $3 million that we came up with. We really didn't pay anything for the gold. But it was the large alteration around it. And in the Snowfield area, the mineralization at surface looks very similar to some of the gold material that I worked on at Hemlo. It's got moly in it and other things. And so we started drilling it off and eventually found 34 million ounces of silver there, 34 million ounces of gold, but right at surface. You know, and it's one of the challenging things in the world right now for resource geologists is finding these large deposits still at surface in good, safe jurisdictions. And so it was that alteration that led us to the project. And then when we picked it up in Pretium, it was these high-grade intersections that led us to continually go in and drill, and then ultimately put the high-grade project that we have at Brucejack today, which is some 13 million tons of 15 grams of gold for about 7 million ounces of high-grade material in the Brucejack area at the project.
Bob, I've heard a report, or I've read a report that suggested that Brucejack is the 5th highest grade undeveloped gold deposit on the planet. If that's correct, could you speak to the quality there when you compare it to other deposits around the world, and then also competitive advantage? What do you think that deposit holds? Well,
that's good. And one way to maybe talk about that is to actually look at the rock. And I happen to bring a sample along today to show individuals. This, you can actually see on here, wherever this kind of gold color you see is actually gold mineralization. And that's what we find. And this is very rare to find this much high-grade gold material in deposits now. It's probably some of the highest grade material I've seen in my 40-year career. And what you have is high-grade gold and the low-grade halo. And it's the appropriate mixes of those two together, the high-grade and low-grade, that makes up the 15-gram reserve that we have identified at the project to date. So when you look at it in a global sense, you're true that we're one of the highest grade undeveloped gold projects yet, although we're moving it through into hopefully permitting it onto production soon. And some of the advantages for it, one, it's located in Canada and specifically in British Columbia. And British Columbia is a province which has lots of minerals, it has lots of operating mines. Matter of fact, over the last number of years, they opened up about 6 new mines or additions to it. And we believe we're well in the pipeline to be one of the new mines that will get opened over the next 2 years as we continue to evolve the project. So you've got the right location, which is in a mining-friendly province in British Columbia. You've got the right commodity, gold, and you have the right amount of it so that our environmental impact is pretty small. Our total disturbance at site will be something about 8 hectares because this is going to be a high-grade underground mine. We'll take the gold out, process it, and most of the material we take out will go back underground on the project. And so location, area of previously permitted mines, and the right commodity with a small environmental footprint is, I think, a competitive advantage that we've had, which has allowed us to take this from this discovery of the Valley of the Kings in 2011 to where we're sitting here today in 2015, 4 years later, and we're now waiting for permits to start construction and put this in production for 17. That's 5.5 years from discovery to production. That's pretty quick, and it's because of all these positive aspects about the project.
In terms of the milestones that you have left over the next 2 years to complete production decision, permitting, and then construction of the actual mine itself, do you expect that those phases will be a bit easier to manage given the market as it stands today?
Yeah, that would be true. I mean, one thing right now, there are certainly other projects in the pipeline, but it allows us to move quickly through the environmental process due to the fact that it's got a small environmental footprint. That too, it will allow us to employ people in the north part of the province. So there's certainly an interest in governments to be able to move this forward and be able to provide those kind of jobs. And because of the fact that we're in an area where there has been unemployment, it allows us to be able to go and do the training that we need for the 40 or so thousand people that live from Dees Lake and Iskut down into Terrace, Smithers, New Hazelton, who could be employees that we can capture within that northern area to come work at the site. Working underground is often heavy equipment operating and blasting. Eskay Creek, which is about 15 kilometers north of us, was one of Canada's highest grade gold mines. And they employed a lot of First Nations in the region as well as others. And so there's people there who have the skill sets who may have now gone to the oil patch or elsewhere who could now come back to areas where they actually are from and be able to work with our project. And so lots of positive aspects in that regard.
I want to ask you about the current market that we're in right now. To give it a little bit of context, I once asked my boss, Rick Rule, I said, how do you think this current market is affecting some of what I regard to be the great mine builders of the previous generation, you among others? And he said, well, I don't think Bob Quartermain, he couldn't care less about what's happening out there in the market in terms of his focused activities. He's not stopping for any of that. But I'd like to ask you to opine, if you could, on the market as a whole. Do you look at other projects? Do you look at pricing? And do you have any thoughts there?
The resource business is quite cyclical, as we know, and we've seen a lot of volatility in the gold space, and that causes some concern amongst investors because we all want to be able to make money, and we see commodities go up and down as they do in the volatility. It's certainly a concern. I think to Rick's point, like himself, I've been doing this for 40 years. I've been running public companies for 30 years. So I was through the crash of '87, through the issues we had in the early '90s, the dot-com bubble, late '90s, the low resource cycle. And what we've always done is kept focus of what the end game is going to be, which is basically trying to create shareholder value in the longer term. And so when you even think about the Pretium story to date, we IPO'd at $6 a share in 2010 in December, which was fairly high. Here we are 4 years later. We had a gold price run up and come down. We have evolved our project, we've issued more stock, and yet our share price is still above that price point. We're still up 20%, or last week we're up 30% from our IPO. There are not a lot of gold equities out there that are trading higher than they were 4 years ago. And it's by focusing on the outcome of the project, recognizing we had a good quality gold project. We were enhancing shareholder value through drilling it and adding to the reserve base that we had and showing there's still exploration potential on it. And then sticking to a game plan and meeting those milestones and financing opportunistically. We have yet to finance below our IPO price. And so I take that as good. And again, it speaks to the quality of the asset. We're always aware of our balance sheet to make sure we never get undercapitalized. And recognize you need to finance in the market when financing is available, when these windows open and when they close. And often people have a better idea of what they think their stock should be worth, but the market is pretty good at determining what it is. And so if you can finance and continue to advance your project in these market conditions, that's what you need to do. Often what occurs is people haven't been able to get strong balance sheets, and so what we're starting to see is the rationalization where mergers go on, the same way they occurred back in 2000 when we started acquiring many of the projects we did in Silver Standard. People had the assets, they didn't have the working capital to continue to get them forward, and you're merged and able to do it. And then from that point, Silver Standard stock ran from $1 all the way up to over $40, and so people really benefit from that. And so this time in the cycle, when it's the most difficult, is often the time when you go out, look for the people that you want to back, look for the quality assets which are there, and then invest in those. And that's the place that you're going to make money as we come out of this cycle, which ultimately we will do. We just don't know exactly when that will happen.
Mm-hmm. And Bob, I've read that you took Silver Standard from a starting market cap of, I believe, $1 million or $2 million, and retired when it was in the range of about $2 billion in size. If we could go back to the formation period of the company.
Sure.
How did that happen? How did you get involved? Who financed it? And what was the market like at the time?
Yes. Well, Silver Standard's a great company. It's been around not quite 70 years now. It will be shortly. It started in 1946, so it has a long history. It worked on projects in British Columbia. Teck Corporation invested it in 1969 and became its largest shareholder in 1985. As I mentioned, they asked me to come out and take it over. And so from 1985 through to 1992, we were focusing, like many other junior companies in Vancouver, of looking at projects and trying to get some traction. And in 1992, Rick Rule and Jim Blanchard came to me and said, listen, you've got Silver Standard, you've got the right name, we like silver. How about we finance you and you go out and look for silver assets in the ground and acquire them now on the hopes that silver prices will go up. And that was in 92. You needed a lot of foresight then. So we did our first financing. We did 3 million shares at 78 cents, raised $2 million. And you're right, at that time the company had about a market cap of $2 million. And we did it to individuals like Rick and like Jim. And as Rick will say, it was one of the more difficult negotiations we had. It got down to pennies. I wanted 80 cents, he wanted 78 cents, and eventually we saw it off. But it was probably the best decision for Silver Standard shareholders because it allowed us to go out and start acquiring assets in the ground. The first one we acquired was the Bowdens project in Australia. And then things like the New Hawk project, we acquired the Candelaria project. We eventually accumulated almost 2 billion ounces of silver in the ground, plus we grub-staked Bud Hildemeyer and Perry Durning, who were excellent grassroots explorers. We grub-staked them for $20,000 a month, and they went down to Mexico and found the Piteria project after a few months. So a $40,000 investment discovered us almost 700 million ounces of silver. But it was doing things at a time when other people weren't, doing that grassroots work. And that allowed us to grow Silver Standard, as you pointed out, over that 25-year period from 2 million to 2 billion, basically a 1,000-fold increase in market cap. And the share price went from 78 cents as high as $48, so almost a 50-fold increase in share price as well. And that's what's satisfying around the industry, focusing on quality assets that ultimately can be developed. And we saw that with the Briquetas mine, they got operating. Silver Standard is still very much a growing concern because of that initial investment that I think Rick and Jim made back then, and our ability to translate on that and find assets that we can still put in production. And from that, we've now been able to evolve off the Pretium story.
Yeah, Bob, it's interesting to hear you talk there about discovery and the value that can be created out of it. And you did note to me a couple years back in an interview that what I've liked throughout my career has been discovery, because of the way that value can be created by using the drill bit, discovering something in the ground. And I want to ask you here now, when you look around the world today, what are your thoughts when you see declining discovery rates and over the past decade, larger quantities of money being spent on exploration, but yet less being found as what you may have found in the late 80s and early 90s? What are your thoughts there?
Right. Exploration is a much more challenging industry than when I started perhaps 30 years ago. Now, just getting the social license to go on property and look at it, whether you're dealing with indigenous populations, whether they're First Nations here in Canada or whether they may be others located in other jurisdictions, one has to look at a much more holistic view in that. It also means the cost is up. You have a lot of often upfront payments or costs that you have to look at prior to getting access to land to go and explore it. And, you know, we've been exploring mineral resources, you know, for the last few millennium, but if you look at more modern techniques over the last, say, 50 years, and a lot of the near-surface deposits have been found, whether they're the large copper projects in Chile, the large open-pit gold projects in Nevada, the large iron ore projects in Australia, the large, you know, coal projects, and as you point out, a lot of those easy-to-find near-surface projects have been discovered and are now being developed, and finding more of the same will become more challenging. You know, there are certainly new projects to be found, but often they're in some of the more geopolitically challenged areas. And one thing we have to focus on in the industry is certainly safety of our people. And even in parts of Mexico now, that with the drug issues going on, you can have people compromised. With what's going on in the Middle East areas, where there's certainly lots of opportunity for new discoveries to be made, it's the one thing that we in the industry have to continue to be aware of. And so our costs have gone up, and I think, as you point out, you know, peak discovery may have come through. Chuck Jeunesse, the president of Goldcorp, made a comment earlier in late November, I think, at a conference, where he thinks we've had peak gold. You're now seeing some of the major companies start to see their production tail off, and we're not finding, as you point out, those large 20 and 30 and 40 million ounce deposits at surface that can be bought in production relatively cheaply, rather than the many billions of dollars which are now needed, and ones where the grade is trailed off. Right? The end of the last century, the average gold deposit graded 10 grams starting in the 1900s. The average grade right now is less than a gram, which makes our own project quite attractive, because our average grade is 15 grams, 15 times higher than the average grade, which can mean you can get really good margins from that. But larger projects need a lot more capital in areas where they can be challenged because governments want more taxation, or it's tough to get the political license that we need to develop it. Means, I think, as you point out, exploration and finding these large discoveries is more challenging, but it's what we in the industry need to do, and I think it's what what Sprott does very well. It continues to fund, you know, the junior individuals who can go out and have a track record discovery and know that they can get in and get a discovery. That's where you create incredible shareholder value, is again through that drill bit.
Mm-hmm. I'd like to ask you now about the global macro picture for gold. What are your thoughts? I believe you've also noted to me in the past that you like visiting your shareholders regularly, and I know that Asia has probably now a larger focus of your attention, right, with the investments with Zijin Mining. So what are your thoughts there?
That's true. I think, you know, in the gold space right now, we're seeing what, you know, everyone in the press talks about, and it's quite obvious, and it's that transfer of physical gold from the west to the east. We see it from the fact that China is now the world's largest gold consumer, consuming well over 2,000 tons, or importing it last year. Recently, with our new strategic investor, Zijin, as you point out, I've been traveling through Shanghai and Hong Kong. And when I go there, I usually go wandering around the jewelry stores or some of the areas where they're concentrated, and they're full of individuals buying jewelry, right, whether it's seasonal or not. And over there, of course, fabrication of the commodity is done relatively inexpensively, whether in India or other places, and so it's sold by the gram. And what you'll find is just a lot of people in buying gold jewelry there. In my last trip just before Christmas, I also flew into the Middle East. So I went to Doha, went into Dubai. When I'd finished my meetings in the day, I'd go to the gold souks at night, because I really like gold. I like the commodity, and just going there and seeing the sales that are going on, and again, the shops there were full. So now that we're down in this $1,200, $1,100 gold price range. We're seeing a lot of people coming in and buying it and buying the physical. And it's that real transference of the commodity from the west to the east, which I think bodes well to keep a floor in what the price will be. And then going forward, as we talked about earlier, if peak gold production is off, as it starts to come down for mine production, the only real storage of gold is either as scrap or held in bank vaults. And the fact that we continue to see more demand as China's GDP grows, right? China's GDP 10 years ago was maybe a few hundreds of billions of dollars. It's now estimated maybe it's close to 9 trillion. China still is growing at 7 or 8% a year. When you look at it in absolute terms, that's $600 billion a year of potential growth. That's a third of what Canada's GDP is on an annual basis, where we've got 2% growth here. And so that's key going forward, is that the shift of gold into physical areas where people actually want it and want to own it. And that can help offset what goes on in North America circles a lot, which is just the paper trading of it, either in the futures markets or people perhaps maybe buying into the ETF. Here, from my travels, we're seeing individuals wanting to know real gold and taking it out of the system.
I'd like to ask you about people, quality of people. It's one of the things that my boss, Rick, really emphasizes in conversation, and quite often he'll mention your name along with a few others in terms of great examples of quality people. How have you thought about that aspect of the business throughout your career? Do you come across people of quality and earmark them and say, well, I may not have a deal now, but maybe at some point in the future I'd really like to work with that person? What are your thoughts on that general topic?
Yes, the success of any company largely is it's people. A corporation, although it's defined as an entity, is made up of the people that work there and the people that lead it, whether it's the board level or whether it's the management group that does it and the employees of it. And I've been very fortunate because in Silver Standard, when I joined it, Linda Sue was the corporate secretary and the only secretary we had, and she remained with the company for over 20 years. And over that time period, we were able to grow it, bring in other individuals like Ken McNaughton, who I've now worked for 25 years, Max Holtby, who works at Pretium, I've been working with him for 30 years, Joe Ovsnick has been 18 years. So been able to find people that have the same values, and one of the values we've had in Silver Standard Pretium is focusing on our shareholders. We as a management group own 3% of the company. And so if you bring in people who understand that you're trying to work for the best interest of your shareholders, they have the same values in doing that, then allows you to grow the company and look at assets. And often people say, well, maybe individually they may not be the best in the business, but collectively we are, because we show that the success we have. And so it's a place where the sum of the parts is greater than the individuals, which you have it. And it's something that over 25 years now, 30 years since I started with Silver Standard, I've been very fortunate to find people. And our way to grow the business hasn't been often going out searching for them, but it's through the contact. Either Rick may know an individual, or people who work for us know quality individuals they've worked in the past they want to continue to working with. And so when you bring them in, that synergy just enables you and helps you to advance and go forward and create a company that's got a good dynamic group working for it.
Bob, for a moment, looking outside of the company, are there any opportunities you think are really interesting where if you had to start your career again, you'd say, oh, well, I would go in this place, I would probably do that?
For someone starting out, if it wasn't in my career, insofar as it might seem to be challenging, but the Middle East, going to places like Qatar, they sit on top of incredible daily wealth generation, with a LNG they have there, or Abu Dhabi, where they're sitting on $1 trillion in the fund. When I'm over there, it's interesting, there's lots of young professionals like yourself who are there, who may have been from North American cultures, who are being able to compensate it really well, and allows them to start their careers there. And whether that career will take them in investing in natural resources, whether it could be oil and gas, or looking at investments in places like Africa, it's certainly a great training ground, and one where there's a certain vibrancy around it. Now, one has to deal with the political aspect of it. As it relates to my own career, I'm passionate about what I do. I enjoy geology and the discovery about creating value. And so for the university kids starting out again, it's often a challenging time, but find a company, work for it. I worked for many years for Teck, as I said, first as a mine geologist with them, and then just as an exploration geologist. And it may have not been the most financially accommodating job that I had, but it's one that I really had a passion about doing. And getting out and doing your passion and then getting the success that I've been able to have with Silver Standard and subsequently Pretium is certainly rewarding. You know, advising individuals nowadays, it's just make sure you find a passion that you want to do and then get out. And then sometimes you may have to start, as I did as a student, as a dirt bagger, taking soil samples or running geophysics lines, because that was all the work that was available. But staying within that has certainly been rewarding. And it's all about that, finding your passion and then going for it. And in the resource business, you can work pretty well anywhere in the world.
Bob, are there a few things that you would advise to a new investor to the space?
I think probably the Sprott model, and one that I follow myself, first of all, invest in the people. Find the people who've had success in the past, whether it's guys like Ross Beatty, Lucas Lundin, the Hunter Dickinson group. You know, you get new guys like Mark O'Day coming up. And then look at where they're investing, and is it a place you're comfortable with? You know, are they finding investments or new projects in politically secure areas and ones that you would feel safe in? They are very good at going out and finding these, because success usually breeds further success. And in my case, I've decided I'd rather come back to British Columbia, where I know what rule of law is and how things are well defined. But I do have personal investments in some of those individuals, not so much because of the full asset they have, but because of the success they've had and knowing they're going to do right by it. And I think that's the key message that you get coming from the Sprott organization, and where it's investing in individuals and then ensuring that the quality assets they have are ones that are going to ultimately be rewarding in the proper cycle to your clients, or to the clients that's brought.
All right, well, Bob, in winding down, is there anything else you think we may have missed?
No, I think, you know, we at Pretium have been very fortunate in coming in, discovering a world-class asset. We've moved it along quite quickly, and hopefully a little over 2 years from now, we'll be pouring gold bricks from it, and that'll be very satisfying for us.
Bob Quartermain, President and CEO of Pretium Resources, thanks for sharing your comments with us.
Great, thank you very much.